Welcome to this special edition of Charts Today. In fact, I should call it Charts Tonight. It is Monday, the 5th of February in London, and we've just had the US market close, so it's in the evening. And I've been tweeting all day. If you're not already following me on Twitter at Charts Today, my Twitter handle is at Charts Today, and I've been tweeting various falls and what's been going on in the market, and a lot of people have been watching that. So if you're not already following me, you can follow me on Twitter at Charts Today. And of course, with Updata, it's really easy just to tweet straight from the charts or the screen. So I've been able to do that really easily tonight as I've been watching what's been going on. The headlines that you're going to hear tomorrow is the Dow Jones has had its biggest one-day fall since 2008. We're down 1,175 points, 4.6%. We have been lower, as we can see on this daily candle. We really just touched support right on the bottom of the cloud. If we look at the 60-minute chart, we've actually been below, and we've been in bearish mode for a few days now. So the big question that everyone's going to be asking is, because the headline is biggest fall since 2008, are we looking at another 2008? And I think the key thing is the market looks very different. If I take a look at, say, the S&P 500 index, for example, and take a look at the 1% point and figure chart, we see here we're still well and truly above support, whereas in 2007-8, we started to get downside targets. We haven't got any clear downside targets yet. So off the top, we started to get downside targets. Now, we will get one off this fall, but we need to then recover and activate it. So the key thing at the moment is what will the column look like and how will that price action build? And back in 2007-8, we had that. And in fact, I can put those on the chart now. And at the time, these targets were very, very hard to believe. But we were seeing downside targets then. We don't yet have those downside targets. So it's quite different from that scenario that we saw in 2008. We can take some heart from the fact that the Dow has found support on the cloud tonight. We were already quite bearish. Those of you who've been watching charts today will know that on the short-term charts we've been quite bearish. I actually rotated out a lot of my tech holdings at the start of the year into more mining and gold holdings. I'm quite bullish on gold and have been for the last few months, mainly because there was just a shortage of clear upside targets. So it wasn't that there was any great sell signals, it was just that there were no clear upside targets for the market left. Perhaps the only exception, we're looking at the Nasdaq here, off nearly 4% tonight on the 100 index. The only exception where we did have quite good upside targets still was on the Russell 2000, and we're seeing tonight again that's fallen heavily, of course. So we are just seeing quite a big sell-off. But it's too early to say whether this is going to be something that will set in. Is it the beginning of a new bear trend? And again, if we look at something like the Dow, we've got on the daily chart, we've been bullish now for quite some time, and even back in 2015-16 there were periods of uncertainty. Of course, this sort of sharp spike is quite significant, and that is a very sort of scary move on the chart, but this may still turn into being a buying opportunity. It's a long way before we can actually say that we're in a new bear trend. So this is a big sell-off, but it's only a counter trend move at the moment. It's no signs that we're in a new bear trend. So it's worth remembering that as well. Now, just looking at some other markets, we're seeing the dollar recovering, so that's quite key. We're seeing short-term recovery on the dollar, the euro falling away below the cloud on the short-term chart, looking bullish still, medium and long-term, of course. The Japanese yen, we're seeing a bit of a sell-off here of the dollar. The yen tends to be a safe haven, so there has been money going into the yen tonight. And sterling, we're seeing also just heading lower against the dollar, back below that 140 level. That's lower than the low that we saw last week. So we are just seeing a short-term sell-off in sterling, and we've had a target here in place at 137.50, which we tweeted about today. We're looking at euro sterling. We're seeing here that sterling is falling. It's the euro as well. So sterling is suffering. Perhaps the key thing is Bitcoin. We've seen a really sharp sell-off in Bitcoin today. Was down over 20% at one stage today. Has ended up about 16% down. So that fall in Bitcoin is continuing. Of course, we've talked about the U.S. markets. Be interesting to watch how the futures trade, both the S&P and the E-mini, through the night and in the morning. Of course, we can expect Asian markets to open lower. The Nikkei was already off 2.5% last night. The Hang Seng Index, which has had an amazing run, was off and now below the cloud. The one market that was bucking the trend to some extent was the Shanghai Composite Index. The Sensex was down, and the Australian market was already down 1.5%. It's safe to say, with the moves that we've seen on the US tonight, we're probably going to see those markets in Asia going quite a bit lower overnight. FTSE 100 has had a terrible couple of weeks already, so it's already fallen quite heavily. But of course, it closed before the US market really started to fall very heavily. There was a little bit of a recovery from the open in the US market. Again, we were tweeting that through the day. But the it's safe to say the FTSE is now below its medium-term trend. That's quite different from the US markets, and we're probably going to see that on the FTSE 250 as well. So the DAX also considerably lower, back below its medium-term trend. So we're already seeing European markets heading south. Brent crude moving quite a bit lower as well. We're seeing targets here into the mid-60s, so bearish below the cloud there. WTI off 2.5%, so again falling lower there. And US nat gas really was down quite significantly as well, down 3%. Copper was a bright spot. Again, we were tweeting that through the day. And of course, gold is up slightly. But I suspect as we see the Asian markets open and the appetite for gold in Asia is quite strong, we'll probably see gold going higher and probably coming back into a short-term uptrend. Interestingly, we've got these medium and long-term upside targets on gold. This is one of my reasons for being bullish on gold. And we do have a downside counter trend target, but for the moment, the medium and long-term charts look pretty good. Silver also looking better on the medium and long-term charts. Another big move has been in US Treasury yields. They dived from 2.88% earlier, and today we ended up at 2.70. So yeah, a full 0.18% their move on the day. So we've just seen them coming back to a bearish, having really spiked there. Still, the long-term picture is above 3%, and we've got some pretty good upside targets. But now it's short-term. Tech is, of course, where the story has been. We've been bearish on Apple for a few days now. We tweeted today that we went medium-term below the cloud. Google, we also tweeted today down 5%, so very significant falls there. Amazon actually one bright spot, still holding its bull trend, but down 3%, and Facebook down nearly 5%. I've sold down a lot of my Facebook shares, but still have a small holding. The medium and long-term trends still look bullish, great upside targets, but the short-term picture has turned bearish. So the key thing is, I mean, even Microsoft, one of the holdings I did sell earlier this year, has really fallen away. So the key thing is, it's too early to say that this is setting in as a new downtrend, but certainly what we should now need to look out for is a move that sets to a lower high and then a lower low. That sort of price behavior, and of course a move below the cloud or the medium-term chart would put us in a much higher state of alert. No clear downside targets yet on most of these charts, so it's really key that we watch for that. We are seeing one just here on the S&P future, down another 7%. And the same on the Nasdaq. We haven't got a downside target yet. We need to see a move up and then an activation down. So the key thing will be just watching how these targets play out. Keep an eye on my Twitter page at Charts Today. And of course watch chartstoday.com for these videos being put out, and my morning calls as well. So keep an eye out. It's too early to say that markets are entering a new phase, but we need to be very cautious. That's it for today. I'll be back in the morning, normal time. See you then.